let's make a caveat too as we're saying this, and I don't want our viewers to get the wrong idea when you say what you will. This doesn't necessarily mean buy today, this minute.
No. Yeah. I mean, I presented basically a recommended list. And the barbell is, just so people know, one of them is this is probably going to work right now. And it's because of either it has to do with office at home, because obviously people can't go to a central office anymore, or it has to do with certain things that have to do with the data center, because of the huge explosion of data that's going converted all over the place because people are at home. And then the other half of the barbell is when we come out. Because when we come out, and I don't know when we come out, but I really like Carrie's analysis that at this time next month is probably going to look a little better. You're going to have to start buying the Disneys and the Boeings. I know I always listen to Stephanie. Boeing's a tough one for me. Disney, my Charitable Trust owns. Wish didn't, but will want to own it eventually. I think that Amazon is going to do well, but I think right now Amazon's a little too high. Walmart is up today. These are the part of the barbell that I say you have to own coming out. So, I mean, I balance what you have to own coming out versus what you can own right now, because I think that the long-only people should be intrigued by Ring Central, by Citrix, by Cloudflare. I do think that Bristol-Myers works. Johnson & Johnson, AAA balance sheet. I like Mondelez here. They're doing a pretty good job, except for the gum business. So I like some stocks here now, and I like some stocks later, but I sure don't like most of the market. And I want to make the point that the stocks that are up on the wall are stocks that are intriguing. Not necessarily intriguing today, but they're intriguing.
How long do you think you'd have to wait, Jim, before the no-touchers start to enter back into the conversation? I mean, look, we've had some people come on the show in the last couple of weeks and buy some of the right. No-touchers on your list, whether they're travel-related or otherwise, suggesting that the prices had come down so much, and there is going to be an other side to this.
I got a business.
We sure all hope.
I got a business in Italy. And I got a daughter in Madrid, and these are probably two of the places that you would not necessarily like to have a business or a daughter. Madrid is not done. I don't know what my daughter just says. Listen, it's one of the greatest nightlife cities, and they were very late to trying to come to grips with it. She loves the city. Northern Italy, again, same thing. Gripped, didn't really change, and yet Italy has been good for the last 6 days. You know, you had a month and a half of just terror. And then Italy got better. We have a better healthcare system. We obviously had a mayor in New York that was, until about 4 weeks ago, was saying and have a great time. That's very much like what it was in northern Italy. So I guess what I'm saying is you take the two worst areas, which are Spain and Italy, and there is light at the end of the tunnel in Italy, and I'm hoping there'll be light at the tunnel by the end of this week in Spain. And there's there's what you got. I mean, you got 6-7 weeks, and I would say that I don't know how. I think ours started the night that Adam Silver pulled the plug on the NBA. President Alan Adams, he's commissioner of NBA. He kind of started it, and Rita Wilson and Tom Hanks. I mean, it was that one night where we realized, you know what, it's here. And ever since then, it's all downhill. And I think that it was all downhill in Italy when Milan Fashion Week. And then you can count the days from Milan Fashion Week, and it means that we got some real bad days ahead, but they do run out.
Yeah. I mean, let's hope, because, you know, as we sort of spring forward here and we enter April, it's the time where we expect the numbers to get bad and hard to bear. And every day it's going to be an update. Every day horrible.
Governor Cuomo, man, he's way too honest, right? His brother. Not way too honest. You know what I mean.
No,
you guys watch Governor Cuomo? Any of you guys?
Well, he's he's been given his updates every day, and he's the one who is, you know, the one where the market is perhaps paying the most attention to right now, beyond Fauci and Dr. Birx and some of the medical experts like Dr. Gottlieb, because New York is such an epicenter and this hot spot that when Governor Cuomo speaks, it's like everybody sort of stops and listens and says, okay, this is the reality of where we are. And he's set to speak, by the way, shortly. We're going to dip into that when he goes through the numbers, as we always do.
Hey, Carrie, well, in Boston, it's okay right now, Carrie, right? It's just not so bad.
I don't know. Okay, we've had a lot of social distancing, I think, here longer than in New York. Most businesses, retail, like my husband's business, the restaurants, bars, all closed before New York.
Right.
New York. There are some essential people that can come. It's not great, but it's not like New York City. It's not nearly as dense as New York City.
Right.
Can I just ask, Scott, can we put a chart up? We pulled together a chart. I think that you've got it there. It's the 10 worst quarters in recent history.
Mm-hmm.
And
We're
I think that would
right
go
now.
back to 87. So what you see is that 6 months in advance, ahead, you have 5 quarters that have nice returns. 6 months later, there are 3 that are bad, and there are 2 that are sort of meh, flattish. I'm not saying that these other quarters where the market was down replicate this. This is clearly unique. But 6 months for the market can be a long time. And just having the perspective of what we're going to be seeing in the economy, in the healthcare system, and the state of the world in 6 months, it's a long time from now. If you think back 6 months, no one had ever heard the word coronavirus.
For sure. But in other recessions or recessionary periods where you may have had those declines, Carrie, you do tend to come out on the other side with some level of certainty and, dare I say, a return to normalcy. This is clouded by the definition of what normalcy is may very well change on the other side of this, and we're all going to have to come to grips with that when we actually get to the other side.
That's a good point, Scott.
Right.
And here's how I look at it. When I short a stock, for example, or when I go long a stock, I say, where can I be wrong? Where's my error going to be? What's my downside? What's my upside? Here, I can't imagine where I'm going to be wrong. The only place I could be wrong is that we conquer the virus in a shorter period of time, which would be a week, not 2 weeks, not 3 weeks, not a month. And that's unreasonable to make. And the numbers that Carrie put up, they're interesting, but frankly, they just don't give me any comfort. When I can go down another 20% in the market, another 10%, and I'm looking at single digits or even 11% upside. Number one, I don't know when that 6 months is going to begin. And number two, that's not a great risk-reward scenario in a situation where this is not going to be cured like in 2008 by fiscal policy. It's just not terrible policy.
I want to go back to the list, and I didn't mean to jump away from it so quickly. And Joe, as you look at the names that we could put them back on the wall as well, that Jim has put together for people to take a look in his barbell portfolio of what you maybe can think about now and what you can think about on the other side of this. Why don't you weigh in on some of these, whether you own them or not, things you're looking at or may end up looking at?
Yeah, and if you listen to doing this television from a remote location, if you don't mind, I'm going to look to my left to look at that list. So obviously,
we're not looking at you
Amazon.
anyway. We're looking at the wall, so don't worry about it.
I have Amazon. I think that's a great call on Jim's part. I like Jim's assertion, though, in just defining what not to own. I think that's so incredibly important in this environment, defining where the ultimate risk is going to be. And I think technology, looking at this list, obviously stands out for the cash-rich balance sheets, the visibility of earnings. I think real estate will do well, low private sector borrowing costs and a return to that suburban lifestyle. And I think the consumer will do well. The one name that I don't see on that list, Jim, is Microsoft. And I view Microsoft really as the shining star in technology in this circumstance. Think about the amount of people that need to utilize the cloud, and think about how much usage remotely is going to be conducted for Microsoft Office and Skype. So I think Microsoft in this environment, obviously it's a position I own, belongs on that list. Well, the other name I would add to that possibly, Jim, would be Home Depot.
All right, Joe, TV's a funny thing. I did a whole piece about Microsoft and why you should own it last night. So I kind of referenced, and I also like Microsoft. So you're dead right. There was a piece about it. If you wanted to know the one stock that you should own, it's Microsoft. So in the interest of not just making it sound like it was in the piece, so don't worry. Home Depot was one that I really want to talk about. It's down badly. There was a firm that raised numbers today, raised price target, one that lowered. You got lumber coming down. That should be good. You got the spring season. But here's my problem. They have a huge planting business, and some of us aren't going to plant this year. And I say some of us, maybe it's like millions of us. So I'm worried about the year-over-year compare. But in terms of balance sheet, wow, Home Depot is so right.
Yeah.
So I just think there's got to be a level that all of us can agree it's the right way to go. I had Marvin Ellison from Lowe's. They raised a lot of money, too. Another one, big box stores that are going to be on the other side triumphant. Home Depot is definitely one of them.
So, Joe, you
Jim, don't you think that?
Go ahead. I'm sorry. Go ahead.
Jim, don't you think that Home Depot and Lowe's will embrace the type of delivery strategy that's working so well right now for the Amazon type companies?
Well, it could be. Look, Home Depot's got a pretty good .com, but Lowe's doesn't. And now why do I say that? Because Marvin said it to me. He's got to spend much more money, and the previous management didn't really understand the value of the .com. So Marvin's behind. But Marvin's such a good manager. I like Lowe's very much. Had them on last week, and they raised the capital. And whoever raised the capital has got the balance sheet. Home Depot got a great balance sheet. On the other side is going to win. And I do think there's room for Lowe's and Home Depot. I hope everybody agrees with me. If you don't, tell me, because it's an interesting question.